Hey guys, this is a Forex price action trading course. This is lesson number 4, what basic price action analysis can tell us. Okay, let's go. In this lesson, I'll explain what basic price action analysis can tell us about a currency pair. Moreover, I'll only be explaining the basic benefits that suit the intermediate trader, and we'll cover advanced benefits in a different course. Alright, let's get going. The benefits of basic price action analysis. Alright, the first benefit is it gives us market biases. Okay, let me explain the first one. It adds clarity to current market conditions. Okay, this is the Aussie NZD monthly chart. Now, if you look at this chart, without any basic price action analysis, it pretty much just looks like it went down, then went up, and then came down again. Now, this information does not help us in terms of trading, right? So the first benefit is that basic price action analysis clarifies current market conditions. So like we did in lesson 3, we learned that this long move is rather strong, and this short move was weaker than this long move. Thus, we came to the conclusion, according to current market conditions, price still has some strength long in the future, right? Now that means this area right here is simply a pullback in a bigger move long. So as traders, now we know that, oh, okay, price is just pulling back right now in a bigger move up. Okay, so let's go on to number 2. Okay, number 2, it provides a directional bias for intraday trades. Okay, let's say we're doing intraday trading. So we'll go down to the daily chart. Now that entire area we were talking about on the monthly chart is this area right here, right? So this is that strong move up. This is the weak move down, right? Now, since we knew that this pullback had a little bit of strength in it in the beginning, we could have been taking intraday short trades, right? But at some point, because the overall bias on the monthly chart is long, we'll want to start taking long intraday trades. So it gives us a directional bias for intraday trades. Okay. All right, now let's go to targets. The first one is it gives us static targets. So a static target is a target that does not move, right? So for example, resistance and support is a good example of static targets. So let's say this resistance was our target. Now, whether price gets there today or it wiggles around for months and then gets to that level, that target price level never changes, right? So it's a static target. Now, because our price action analysis states that this move up is stronger than this move down from this pivot, it's telling us that this move down is a pullback in a bigger move up. Correct? Which means if our analysis is correct, price should at least reach this pivot high, because the very definition of a pullback means price will reach at least the pivot high where it started. So it gives us a static target, which is this pivot level right here. Now, whether price gets there today or wiggles around for months and then gets there, that price level does not change. So it gives us a static target. All right. Okay. And it also gives us the direction of target extensions. All right. So let's go back. Again, let's say we're intraday trading. All right. Since we knew that this pullback had a little bit of strength in it in the beginning, let's say if we took this short trade, perhaps we could extend these targets a little further out. Maybe even this one, right? But at some point, since we know that this move is just a pullback, the direction that we want to start extending is long, right? So at some point, we want to begin starting taking bigger targets and extending our long targets only, and not extending our short trades, right? So it gives us a bias for target extensions. Okay, now let's go on to stop loss levels. It provides an intellectual price level that proves the analysis was wrong. Now, this is perhaps the most important of the three benefits. So it gives us an intellectual price level which proves our analysis was wrong. Now, since we were basing our analysis on the strength of this move up and the relative weakness of this move down, if price reaches this pivot low right here, well, that will mean our analysis was wrong. Now let me show you how that's a tremendous benefit. So let's say price kept falling down like this. As long as price does not reach this pivot low, well, these pullbacks are a good thing because it minimizes our risk, right? But let's say price actually keeps falling and hits this pivot low price level. At this point, we're going to tell ourselves that our analysis was wrong. Thus, we will not be taking any more long trades. Now, hypothetically, without a stop loss, what could happen is, when price keeps falling down, even past this pivot, if we keep longing it, without an intellectual stop loss level, we will keep buying as price keeps going down, possibly forever, right? And that could blow up an account. So basic price action analysis provides the most important element of trading. It's the intellectual price level that proves our analysis is wrong. All right. Okay, that was it for that lesson. In the next lesson, we're going to go on to how to draw a trend line effectively. Okay? In the coming lessons, I will be explaining how to find the price characteristics we have been using in the past lessons. Okay, what I'm talking about is, I want to explain how to draw a trend line effectively. In other words, I want to give you the rules that if the trader abides, can consistently draw legitimate trend lines. Because without rules, well, you could say, this is a trend line, this is a trend line, this is a trend line. It really never ends. Moreover, we were talking about double bottoms. Now, why is this double bottom a legitimate double bottom? Why can't this be a double bottom? Or why can't this be a double bottom? Right? So I'll be explaining how to find the price characteristics we have been using so far in the next couple of lessons. Okay, and thanks for watching, guys. Okay, bye.